Okay, so let's go over let's go over the system and let's take a look at the NQ. I think that's a good market, and the rules for trading are the same no matter what market you're in. Actually, we'll do crude in the NQ since the quants on these two are different. The NQ, the Dow, the NASDAQ, and the Russell all have the same system. And then all the other markets have the same system as crude. Now, let me just explain what we did on the NQ. Now, the NQ first line is the cash metric. If you want it, you need a kinetic data feed. And it's just looking into the cash markets, and what it's doing is it's taking the ratio of up volume to down volume and the ratio of stocks upticking to stocks down ticking. And on these two, it's providing you with a window into what's going on in the cash market. Now, I think it's an important line. And you can see it was the first to turn green on this move up on the NQ. I mean, as soon as the cash market turned, our futures market rolled. So it's an important line to have. Then we have our three correlative markets looking at our three lines looking at 9 markets. And what we did is we jumbled them up, not by function, but by speed. And if you'll notice, the thing qualitatively is that they're much more reactive. It used to take the quants a long time to turn. Now they turn faster. In fact, they turn very fast. If you'll notice, I mean, you would never get, now that's the cash metric, so that's a little different. But that first quant went red on one down candle. Because we have the speed here very quick. I mean, one down candle turned the upper quant red and the lower quant yellow. So these are going to move very quickly. And the reason we sped them up is because these index equity markets, like the Dow, the E-mini, and the Russell, are moving so slowly. Even bonds and notes are moving slower than normal. So these are looking at correlative markets, and they're looking at markets that should go up when the NASDAQ goes up, and markets that should go down when the NASDAQ goes up, and vice versa. So really what they are is an indication of money flow. And they did a great job today. On any wick into the 15 or the 50, when you had all the lines in this upper line here, which is just telling you, if you don't want it, you can make it transparent. I mean, somebody wrote to me and said that it's too, this is too busy. If you don't want this line, you can just go to the indicator. Here, we're going to change the name of it right here. And you can just make it, it's the dashed line, it's the fourth line, they're in reverse. Just make it transparent. And if you don't have the kinetic data feed, you can make your first line up here. I'm sorry, this would be your third line. Make that transparent. So you'll just be working off the 3 quants. And honestly, there's nothing wrong with that. You'll lose a little specificity, but you can still do it. So I hope you understand that what we're looking at here is trying to get a handle on the direction of money flow. And you can see it does a really good job. It's not looking at price on the trading chart at all. It's looking at other markets. And you know 3 of them, 5 of them actually. You know, we're looking at treasury bonds, treasury notes, and the other index equities on the NASDAQ, the Dow, the Russell, and the E-mini. That's 5 of the 9. So it's looking at some currencies, and it's actually looking at an energy for the other correlative markets. And they work extremely well. Now, the difference here is that we don't have a cash quant, and all we have are 3 correlative markets. They're still in the same, they're still all 3 in the same line. They're just, we really sped them up. That's really all we did. I mean, these are much faster lines because we don't have any index equities here. There's no bonds, there's no notes, there's no Russell, Dow, NASDAQ. All we needed was to make them move at a quicker pace, and they're working really well. And we played around with it and played around with it, and you'll notice we split them into 4 lines. So we have multiple speeds, and very, very helpful. The key speed and line is right here. That 4th line, well, that 3rd line from the top, right here. That's the line I'm looking for. If you want to take risk, and I should have taken it here, and it would have given us a full winner. I'm just really, I mean, it's always easy to call a trade in retrospect. I'm telling you, this did not set up that great. It still had support to break. But if you want to take, if this is the risk you want to take, this is the place to take it, right here. Off resistance with the 3 line down. So this is the way all the other quants move, except again for bonds and notes. I'm not going to talk about bonds and notes because I don't want to get into, I don't want to make it too complicated as to which markets you're looking at, because that's not important. And I know that may seem, you know, I mean, I want you to have as much information as possible, but the most important thing is to know what line has the strongest predictive value, which is what 99.9% of all other software can tell you, is what is the most important thing you need to look for on a trade. And it's this line, the 3rd line down on both markets. That's your key. Now, if you take a trade without that 3rd, you can, if you have the 1st, 2nd, and 4th. Remember, the cash line's important, the 2nd's important, and the 4th's important. But the 3rd is the most important. And if everything is perfect and you don't have the 3rd, you can take the trade. You just understand you're taking it with a slightly increased amount of risk. Now, the most important independent variable on the chart is background bias. If you trade without it, I think you're always taking a risky trade. Right here. Green is the strongest, blue is the weakest, and the 2nd strongest is this cyan. Well, that might be, I think that's magenta. I always get those mixed up. But they're all telling you your anticipation is for a trade long. And there's no equivocation in terms of the direction you have to trade or the direction you're anticipating the market to move. You can't take a short trade. You can only anticipate and look for a long trade. If you trade in this space, it means your two higher time frames are not aligned and you're going to accrue significant risk. And if you look at crude, if we go back, look at this time right here. Now here, crude is a total mess. And all you have are one failed pivot after the other. Nothing here is low risk. But as soon as you get background bias, and this is pretty strong background bias long, you're looking for a long trade as long as everything else sets up. Now, this is not today, so we don't have a real-time evaluation, but there's a winner, and here's a turn and a winner. And these are both tradable. You've got your key quants here. Got three, actually. So that's what you want to trade with. Now, when you get overbought, when this 15 is way off the 50, just don't take anything. And that was the problem with the NQ. Now, we're going to have a very difficult time making an objective assessment because the market moves here in a geometric way, not arithmetric. When it chops, it doesn't move much, but every time it moves 2 ticks, it fires up. So it's moving the equivalent every 2.5 candles is the equivalent of a 5 range. So, but we're going to figure out an MA diff and quantify how far you want the 15 from the 50. And once it exceeds that number, the risk is going to be too high to take a trade. Right now, we just have to do it subjectively, and it's not that hard to do. I mean, you want it as close to the 50 as you can. Let me just talk about our two lines. These are our two new lines. And this is crude right now. And let's take a look at the NQ right now, just for the heck of it. See, the NQ is moving up. Got money flow. Here's the cash quant or the cash internal. The NASDAQ it should be moving up. It's got more up volume than down volume, more advancing issues than declining issues. Than declining issues. All the correlative markets. You can see the market's trying to make it up. It's just got no volume to do it. That's the problem. And you always have to watch that lower right number. When you've got low volume, just do not trade. It's just too tough of a market set up to trade. But this line and this line, we combine a geometric or an EMA and an arithmetric or a simple to get this line. So I can tell you what this is. This is a 50 EMA of an SMA. And this line is a 15 EMA of an SMA. Now, I don't know if anyone's ever done that before. But I didn't want to put up an EMA. And you saw the EMA move slightly faster. Because the EMA, I think, is too fast and it just hugs price. I don't want it to hug price because then it becomes a fait accompli that it's always going to act as an area of support or resistance, no matter how price reacts. And I'll show you the EMA. I have it set at a default. Just give it a second to see. It's always going to hug price, no matter what price does. When it moves one candle down, the EMA jogs down. When it moves up, you see how it's bending with price? and our EMA of the SMA is smooth, that's a much, much better assessment, I think, of support and resistance. I didn't want a line that just bends with one candle. So it's always going to act as an area of support, no matter what happens, because it's going to hug price, no matter what. Now, if price does peel off here, but the EMA is too tight of a moving average. So we slowed it down by combining the EMA and SMA calculation. Same thing with the 50. It moves slower than an EMA and faster than an SMA. So let me take out that other indicator. Now, the goal of the software is to give you an assessment of risk. That's all software can do. If it gives you a system-generated entry, it's telling you that risk is low. But as discretionary traders, we have to make our own decision. And I think it really does a great job of that. Now, the dots are very fast assessments of the combined E-mini and Russell. And I'll show you what they are. Let me put up paint so I can draw a little bit. Now, let's just make that the 50. And I'll make it another color so it's a little bit easier to see. And here's the 15. Now, you can see that the 15 here is sloping, and let me change. I can't take it out. All I'm going to do is I'm just going to go right over it, make it green. So on a long move, if price is here, this is where you're going to get the darkest dot, because you're above the 50, you're above the 15, and the 15 is green and moving up. That's going to give you this dark, either fast or slow dot. We'll just call them dots because it's harder to, it's easier than to say whether that's a cross or a dash, whatever the heck. You've got your dual dot, dark green. And that's really the strongest dot. Now, if the 15 is here, it hasn't crossed the 50 yet, and price is here, but the 15 is below the 50, you get your second strongest dot. That's this color. So that 15 cross 50 is a big event. And we use a different 15. For this, we use the trend, the RL trend, for the assessment of the dots. It works, it's a great assessment for that. So we still have price above the 15 and the 50, but the 15 is down here and has not crossed the 50 yet. And then the third assessment, or the weakest dot, is when here's the 50, and here's the 15. It's crossed, but then it's flattened out and turned yellow. And if you see the trend, you know the RL trend does that a lot. And price always has to be above the 15 and the 50. So price is still here. But you'll notice you've lost a strong trend component. So this is the weakest stop. You're above all resistance. You've got your 50, and your 50 should be sloping up. I didn't put in the slope of the 50, but it does have to be sloping up on this trade. But your 15 is flat now. That's your weakest stop. So you have dot 1, the strongest, where the 15's green, the 50's green, the 15's cross the 50, and price is above both. Darkest dot. Second darkest dot, 50's green, 15's green, but the 15 hasn't crossed the 50 yet, which is a big event. Second strongest dot. Weakest dot, 15 has crossed the 50, but the 15 is flat now. So you don't have a trend, but price is above all resistance, so your anticipation is for a move up. And that's the problem on those early crude trades. Price had not broken all of this support. It still had the 50 to break on that move down, and that's why I didn't take the trade. And just the opposite is true of the short trade. On the strongest dot down, oops, let me just make it. You have the 50 red, and you have the 15 red, and price is below them both, right here. And that's your dark pink. Let's go to an area where it's real big. Right here. I mean, you absolutely cannot even think about a long trade. Then your second strongest down, your second strongest color dot, which is this lighter red, is when, I can't do it. Here's what I'm going to do. Is when the 15 has not crossed the 50 yet. It's still above, but price, here, I can do this. But price is here. Oops. Is here. It's below the 15 and it's below the 50. And then the weakest, and actually I put price on the wrong side. I'm sorry. Price has got to be here. And then the weakest dot down, and I'll just give a new chart, is when you have the 50, you have the 15, it's crossed, but then it goes yellow. And price is here. It's below both, but you've lost your momentum to the short side. And the trend, the reason I like it so much for assessing the dots and background bias is it has a volatility component to it. We want the markets to be very volatile. And when it's stoking down, even if it hasn't crossed the 50 yet, if it's red, it means that the market is in a volatile condition. When it crosses the 50, it's even stronger to the downside. But once that trend line goes yellow, you've lost a tremendous amount of volatility to the downside. Now, just to show you, I'll put the trend line here. So the dots are very helpful. I would not discount them. They're right here. Here's the trend. Now, it doesn't really work that well on a Unorenco. And I'll tell you one of our secrets, since you're in the room. Now, here's the trend line. Let me make it thicker so you can see it. I'm going to make it a 6, so it's real thick. It's not coded to deal with the geometric movement of price, only the arithmetic movement of price. Here it is. And you see this yellow is an area of low volatility. And here it's high volatility. But I don't want to recode it. You see this yellow? That's like a no trade zone. But it doesn't, I purposely do not want to recode it for that. So background bias and the dots are all looking at range charts. Now, the reason I don't give that information out is because I don't want to confuse people. I don't want to mislead nor confuse. It is looking at 2 higher time frames, but it's not looking at 2 higher Unorenco time frames. It's looking at 2 higher range time frames. So it's a little bit of our secret, is that what we're doing is we're combining range and Unorenco. And there's nothing wrong with it. They have the same principles. They only form a new candle based on the movement of price. There's no time component. You know, if you're looking at a tick chart, there's a tick component. It's not a Renko brick. So they're very similar in movement, except that Unorenco tends to move faster, because every 2 ticks on a 2 Unorenco, you get a new candle. Every 4 on a 4 Unorenco. So it took us a long time to get the appropriate higher time frames, and we've got them, and they work perfectly. And that's why the trend works so well. And what we just did was optimize the speed of the 15 to cross the 50 when background bias goes green. This is all optimization. So you're going to get the okay to take a trade as soon as background bias goes green. You're almost always going to get that 15 about to cross the 50. You're never going to get held up. And if you look here, the 15 crossed. You didn't get pink, but you got a nice down color. It's a strong down color to trade. You don't get held up by the 15. Now, I hope everybody understands this. If you don't want to, you don't need to, because really, to me, I think it's a very simple chart to read. I don't think that there's, it breaks down into much complexity. You want to take a long trade when price is above the 15 and the 50. You don't trade in between. You want to take a short trade when price is below the 15 and the 50. I mean, optimally, you want the space between the 15 and the 50 to be fairly narrow. I can't objectively quantify it yet, but we will. You want dot confirmation on the long and the short. You'd like an oscillator signal, which does decrease risk. Now let me show you the 2 other signals we have besides the oscillator entry. Hold on 1 second, I'm sorry. When somebody sends me a message in WhatsApp, they put 1 Okay, one word per line. Okay, now this is the VWAP. Oh, let me turn off the sound. This is the VWAP, the volume weighted average price. It's just a moving average with a volume component. So it's a very important line. You don't want to trade into it, which is why this trade is potentially very strong. It's weak because you don't have background bias. And I think you actually do when you play around with the charts. Sometimes you have to reload them. Remember, fractal indicators act a little funny. So it is, so you do have it, and you're trading above the VWAP. Optimally, that's a much better trade. You go long above it, and you go short below it. And don't trade into it. I mean, this price went right through it, but a lot of times price is going to bounce off of it. And it bounced off of it right here. This is 1800 hours. You're not going to trade it, but you need to be aware of it. Now you see how important our pivots are. I mean, they really do turn price. And the reason the pivots are so important is because they were actually real pivots. And I'll tell you, there are very few software systems that do this. And I want to show you the pivot. And I've mentioned this before, but I'm doing this for the new people and the people who are confused. A pivot is created off a candle body, not a wick. Most pivots, I mean, this is Japanese candlestick rules. It's easy to create a pivot off the wick. So that's the way most pivots are created. They're coded cheaply and fast, and they just trade off the wick. They trade off the candle body. This is really where sellers came in and pushed this market down. And this is where you have to beware of the next move up. And you see what happened? Price never broke it. It turned it. Now, every time a pivot is hit, it weakens because there are hidden sellers here, and you use some of them up. The next time, it broke. But you always have to be careful. And the way to make an assessment of the power of a pivot, and it's only a gross assessment, since you can never be sure if a pivot will hold or break, is you got to squeeze the chart, look at the length, and look at how many times it's been hit before. When it's been hit once, you have to assume that it may hold up again for a second hit. When it's been hit twice, usually the third hit will break it. But you still have to be very careful. And also, the assessment of when a pivot breaks or doesn't break is also almost always done wrong. Most pivots, again, they just do it. They do what's expedient and easy to code. Anytime price pushes through a pivot, the pivot stops tracing. What you really need is a 2/3 candle body close. And you'll notice on this pivot, you got a big amount of price closing above it, but the software accurately determined that not that 2/3 of this candle body did not close above the pivot. So the pivot kept tracing. It kept tracing on this candle here. 2/3 of the candle did not close above, and it only broke on this candle. That's your breaker. And you see it stopped tracing here. That's a real pivot. And that's why you have to be careful when you trade into those. Because this is really where buyers and sellers are sitting. And I get kind of amused when people talk about hidden buyers, hidden sellers. They use all this complicated order flow. Now, it may work, I shouldn't mock it because it may be very effective. I've never found it to be. An accurate pivot is going to tell you, I think, better than anything, where you're going to encounter a large number of sellers or a large number of buyers, and they're going to be sitting right at those pivots. They turn their market there once, they're going to turn it again. Now you can have a pivot at every turn in direction is a pivot. What we do is we just move the sensitivity of the pivot indicator. I got to get rid of, I have 2 carbonites in there, so, and I already renewed one, and the other one's keeps asking me to renew it again. The pivot sensitivity is set to 150, and I think it's a good trade-off. If you get more pivots, it's going to obstruct your trading. If you get fewer pivots, you're going to miss out on potentially areas where you shouldn't trade into. Now, this is a relatively small pivot, and occasionally you're going to get these, but the sensitivity is low, and you can make the assessment here that this is a weak pivot. It's really not had much time in existence, and if it sweeps through fast, it's probably going to take those sellers right out. It's those long pivots like this one that you have to worry about. Now, there are other lines on the chart, and this is just a support pivot. This is a resistance pivot, blue and red. This is the open, which is a very important line in terms of support and resistance. And this is yesterday's close, right here. So you see the NASDAQ, since here's yesterday's close, when it opened this morning, it gapped way up from yesterday and created a new open all the way up here. And here's the open, way above it. And it's you know, the market's pretty dead. Let me tell you, it could still make a swoon, but I think it's important to point out that there will forever, as long as the market exists, be traders taught to take these markets short here, here, and here. And all we can do is learn to never follow their example. Now, they're trading a system. You know there are no institutional traders in that short move. Because if there were, it would work. Because institutional traders have a lot of money. And when they turn the market, like here, it goes. These are just the small traders like us who have been taught to trade. Somebody's alarm went off. Who are taught to either trade stochastic divergence, MACD divergence. They're trading off fibs off their trading chart. They hit a fib, they're going to short it, and they're going to get run over. And that's the one thing that we can avoid, and we avoided today. I mean, I was chomping at the bit to take a couple of these trades counter trend. Thank God I didn't, because all of them would have failed. This one would have made it at the expense of like 6 losers. So it's just, I mean, here's your winner, but try to figure out which one of these is going to be that trade. This one, this one, this one, this one. Eventually, the market's going to pull back. You just can't predict when. And I'm telling you, nobody can predict when. You cannot call a high and you can't call a low. I've tried it for 15 years and it can't be done. I'm trying to think what else. Oh, now the 3-line indicator, what I'm going to do is hidden. And the reason I'm not going to bring it up and make it visible is because I don't want you to use it. visible because all the information you need is in the candle body right here. When the candle body is blue, order flow, stochastic, and momentum on a multi-time frame basis are aligned to the upside. So it's a great assessment log. Now, if you're wondering why in the middle of a trade, when price is continuing to rise, do you get black candles? And the reason is we have coded into this oscillator divergence. And what this is doing is telling you you're getting oscillator divergence. Because the 3 line is not going to go black in the middle of a move. You get it right here too. It's oscillator divergence. Now remember, I reloaded the charts, so this is not accurate anymore. And the fractal indicators, I'm not going to argue with Ninja over what the issue is, because they scream at me if I tell them it's the platform. So I'm not going to say that. I'm going to say it's just a coding problem with fractal indicators. But when you reload your chart, they change. Nothing on our system ever repaints. When you're open and trading, you can do a look back and you're going to see exactly what's going on. But once you close your charts and reopen them, it's going to shift everything approximately 2 candles to the right. So it's going to change, and it's going to change the color of the 3 line. Now, the oscillator is not a fractal indicator. So the oscillator entries will never change. Remember, it's moving on an exponential. And what it's doing is it's taking the oscillator formula, which is X, and taking it to the second power, X squared. If we wanted to make it move faster, we could take it to the third power. But that would make it move so fast, you can see how well that second power assessment just seems to fall on every single pivot. And that is optimization. It's not an accident that it does it, that it's sitting around the 50 line to give you this move up. And it does add power to the trade. Now, there are 2 other entries, and I want to show them to you both. Now the system takes a little bit of screen time. And I think that every night when you trade, you have to go over the day's trades and make an assessment. Remember, you can get a winning trade that's a lousy trade, and you can take a losing trade that's a perfect trade. So you really have to go over them when it's quiet and you have time. That's why I do it when we finish, because the trade I took on crude was definitely a risky trade. And I said it going in, and I didn't say it to cover my butt. I said it just to be honest. And if you took the trade with me, I wanted you to understand that you were taking the trade with a little bit more risk than I'm normally used to accruing. And it just shot to 5. And I closed it as soon as it did, and it only gave me a point, 1 tick on that runner for 60. But I was not going to anticipate a break of this pivot. And this market was towards the end of the day. So I was just hoping we'd get follow through, get it out, and then close the trade. And that's a riskier trade. I'd like to trade earlier in the morning, but we didn't have background bias to take the trade. And I want that. I want that multi-time frame alignment. And you know the problem with the NQ. It opened overbought and it just stayed overbought. This is the narrowest we had. And here is where we could go long. The problem is we have no volume. That's all. At this point, at 11:45, 1158. I mean, volume is dead, and anything you take is very risky. But you can see price is humping up slowly because you've got that green. And here are those crazy sellers trying to turn the market. They're calling the top. It's not going to turn here. Remember, you've got the 3 line. Order flow is a very important component. And order flow is telling us we've got bullish pressure. And we had it here. I just retooled the market, retooled the chart. We had it here. It's just not possible to go against these lines. It's not possible to trade against the multi-time frame alignment of the NASDAQ to the upside. Unless you're an institution, then you're going to change the direction of the market. But we're not going to do that. We want to trade with them. And right now, I don't think the institutions are trading at all. It's just the small traders like us because the volume's so poor. So we're going to stay away. And if one wiseacre trader throws in a 50 lot on the NASDAQ, they're going to turn it and blow it up on us. And we don't want that to happen. That happened to us on the DAX a couple times in thin volume. We were blown out of the trade on 2 down candles, and then it just resumed the trend. So that's why you don't trade this thin volume. But you can see we've got the direction right. And the 3 line is calling it. The quants are spotty because of the fact that the markets are moving so slow. And this is just real slow movement. Here's our key quant right here, kick in. And once you got that, along with the cash, which is intermittently green, and all our other quants, which are intermittently green, you've got yourself a long trade. You just need to get it at the pivot. Now, the 2 other entries, this is called the revolutions. Now, Sergio's working, this is what his to-do list right now. He's in the process of putting this on the Dow. I don't know what other markets, and modifying it so that it looks at every single independent variable and will be a go signal to trade. And you're going to have very, very little discretionary input. You're going to need a little bit, but it's going to actually make an assessment of how far the candle body is off the 15 or how far it is off the 50, depending upon what area of support it's using. And he's working on that now. Right now, it's still a great signal, although it doesn't take into account as much stuff as I would like it to. And if you look at it, it takes a lot of winners. It is not a guaranteed winner, but it wins here. It's a winner here. Here, it doesn't make it. On the NQ, it's not a winner. But you get, I'd say 75 to 80% of these signals work. Here is a loser. And obviously, you have to exercise discretion. Why don't I just open the chart up so I can find it quicker? See, here it's triggering on an oversold market. We wouldn't take it, and we want that to stop. You see, here it's triggering. It's just not set up perfectly. And just when I tell you how great it works, we're getting a lot of. I took this trade and went 18 ticks. This trade into a pivot. See, these are variables it's not looking at, and that's what we need to get it looking at. All of the other things that go in, but it's still a very, very good signal. Even though the last few, here's a winner. I showed you. Here's a winner. Here's a winner. It's a good signal. Now the other signal is it's a signal that, although I don't talk about it, you can actually look inside the indicator and see what it's doing. It's looking at multiple time frames, but it's looking at multiple range time frames. and it's called the continuation signal. And you can see it's set for range, not Unorenco. And the longest period it's looking at is an 11 range on the NQ. And it's also looking at an 8 range. So it's looking at an 8 and it's looking at an 11. Now this should be 13 if we look at fib numbers, and there is symmetry to Fibonacci. I don't think it applies to price movement, but we sped it up a little bit and we didn't carry that out to 13. We knocked it down to 11. And you can see it looks at price action and market structure on multiple time frames and really gives also nice entries. Here it is. That's the continuation signal. These are all smart entries. A dumb entry just looks at price on your trading chart, which doesn't tell you anything. This is looking at 2 other time frames, and they happen to be range charts. And up it goes. Now here's all 3 at the same time. A revolutions, a continuation, and an oscillator. And bam, up it goes. Now if you get that, you might want to take the trade no matter what. I haven't seen that before, honestly. Now let's look for a couple more continuations. And we're trying to make it easier to trade. That was the continuation. Here's the continuation. So you know that you've got a lot of symmetry in the market. You've got long background bias. You've got your dots, and I showed you how they're calculated. This is the intermediate color. So that tells you that the 15 and the 50 are both green, but the 15 hasn't crossed the 50 yet. And that's exactly what's going on in this color. As soon as the 15 crosses the 50, it goes dark green. And as soon as that 15 flattens, it goes to light blue. So here you've got an oscillator entry and you've got a continuation signal. And we could make that offset a little bit better so it doesn't hide the oscillator entry. But this is a terrific long trade. And you'll notice here, your key quant line is with you on the trade. You also have your lower quant. You don't have the cash yet, and you don't have the upper, but that's enough. And up you go. On risk assessment, that's a go. Right off support. That's a great trade. And look how close the 15 is to the 50 on the trade. Very narrow here. Now remember, we want to take a trade where the potential reward equals the risk. And the only way the potential reward can equal the risk is a trade where we're likely to get 30 ticks. So if you take a trade, now this trade went 54 ticks, I think. No, 650, I don't know, 57 ticks, I think. So obviously, if you trade an overbought market on a statistical basis, the probability of getting 30 more ticks is small. It's never zero. All you're doing is via your risk assessment determining the probability. This is a trade at 12 at 2:13 in the afternoon. Now you just don't have an entry here. You don't have any quants to pull the trade. You do have the dot verification, but it's just not, it's got too much risk. It does work. And the problem is you don't get a wick. You got a wick back right here on all your quants, right here maybe, you could grab the trade. But you don't get it. It just goes straight up in the air. And you see what happens here? It goes nowhere. Now, that's a green dot. So you just have to, I think it's real simple. Keep the 15 close to the 50. Keep your risk low. Get a dual dot confirmation. Make sure that your candle border is highlighted in blue on a long, gold on a short, and those are just my default colors. You can take the 3-line and make the 3-line color, so have it gold and royal blue. Somebody asked me yesterday, and I sent them how you change the thickness of the candles. You just go up here, the thickness of the color, you go up to data series and open this up, candle outline. That's the candle body, and here's the wick. I have them set to 3. And if you want them thicker, set them to 5. If you want them thinner, you can set it to 1 or 2. That's a function of the Ninja platform. We pick the color, it determines the candle thickness. So I can't think of anything else. I think we've really defined risk really well. It doesn't mean we're going to get every trade. I just think it means we can, if we get an entry on a low risk trade, we have a high likelihood of getting a winner. My problem is I have to learn to sit on my hands. And that's what I had a long talk with this person with yesterday, is you can't take trades like this. Now, I only lost 100 and change yesterday because I got a bunch of winners, but I just threw away. I mean, look at these short trades here. Now, this is a tough trade to get on that news. The market just took a big collapse. And here's what happens when you sell an oversold market. Like if you took this continuation short here, it blew right up at you. Kaboom. You're out of the trade and stopped out. So you have to be very careful about trading an oversold market. But you can't take these hanging candles. And I'll show you the ones I took yesterday. I'm embarrassed to show them, but I want you to see them so you don't do it. And let me see if this is yesterday. Yeah, I took this candle right here. It doesn't have the halo anymore. I went long here. That is a real lousy trade. And that cost almost $375. That trade alone changed us from positive to negative, which is crazy. Should never take this trade. Hanging, I mean, this is a hanger. Push this candle body right into the 15, but don't take this trade. In fact, this might, to me, this is almost a prime reversal candle. I wouldn't take the counter trend trade, but this is a crazy trade. And then there was one other I took. I don't know if I'm going to be able to find it. I don't think it might have been here. I thought they were very close together, but that might have been here. I saw this pullback, and I went long. You just can't do it. You've got to trade. Here, I took this trade. It's a better trade. And this one, I think, went 14 or 15, came back and took us out of break even. It didn't make it all the way. It wasn't a bad trade, though. And you see, this trade didn't have any quants. I remember this trade. I mean, we may have taken this trade on this. I mean, this may have been a winner that I did get right here. And we did have the 3-line here. This is a good trade. You're sitting right on support. And you're entering on your second bear failure. And let me just talk about bear failures and bull failures really, really quickly. So I'm really good. I mean, I don't want to overwhelm you. What we'll do is I'll have Sergio chop off the trading session because it was so boring. I'm sure all of you want to rewatch 2.5 hours of us sitting watching trades that don't ever work. We just didn't get any entries, and one slightly higher risk crude trade that made 6 ticks, made $60 right here. Now, if you're not sure about entering here, if you look down right below, and I remember this trade, we had no quants on this trade. And if you look at the background bias, it's blue. And remember, that tells you that our 15 is flat. We have to go long, but we're in a weaker uptrend. If you wait for the next candle and you're lucky enough to get this wick, now the trade may just run on you. And if it does, you have to kiss it goodbye. But if it comes back and gives you this nice big wick and all the quants turned, and they turned all of them on this one candle, which is unusual. If you look at all of these quants, all the reds kick in at different times, the greens kick in at different times. All of a sudden, on one trade, every quant kicked in, and we went long. And these are the bears trying to push the market and reverse it, and they fail. That's a lower shadow. I mean, price got this low, and the bulls yanked it back up. Price got this low, and the bulls yanked it back up. And you're in. One tick above the close, hopefully, not 14 ticks above on slippage, and up you go. And I think we got a first target on this trade. I think it went 22 ticks. See how my memory is. $25 ticks. I mean, we got an easy first target on a nice trade. So watch these. They really do have meaning. Now you need a good setup, but then you can leverage them. If you're not sure about the first candle and you decide to let it go, don't turn your back on the trade. Wait and see what happens. It may give you this configuration. Background bias may turn to green. The quants may roll in your favor, and then you get the trade. Now, I think I took this trade too. We had every single quant. I'm not going to try to guess, but I know I had a couple of really big winners in order to bring us back to $140 down on some really lousy trades. I got some nice ones, and that's a good trade. It's a little risky, but on three quants, your cash metric, this is a strong uptrend. Just remember the 15 hasn't crossed the 50 yet. It crosses it right here. You've got your wick one tick off the 15, and you're really trading off dual support. The 15 and the 50 are just crossing. It's a nice trade long. So I hope I gave you a feel for how to trade, and I just want you to notice this. The 50 never doesn't cross till here. And when it does cross, you have no quants. So you can't take this candle short. So just the signals on the software prevent you from trading. And you can't take this move short because the 15 never crosses the 50. And what happens? It goes right back up. If you chase this move down, any place in between, and this is a pretty decent move. God knows where you would decide to get in because there's no wick. You're just not anticipating a short trade until the 15 crosses. And then when it does cross, you really don't have quant confirmation. And you do have your key quant, but that's about all. So, and the fact that, if you had background bias here, I think I took this trade. And you know what? I took this trade. It was a loser because I had this, I had background bias. I was trading off the VWAP. I was looking for a short trade, and that was a loser. And that wasn't a bad trade. The 15 across the 50. So you're going to get some trades that don't work. That's why you have to be so conservative. And then I came right back with this winner. So just be conservative. Now here's where the market is now. And here's where crude is now. Now, crude is definitely set up for a short trade. I mean, you can see that. And here's, you just don't have the quant here, which is a shame. But, you know, these are just moves you can't. I mean, I don't want to speed up this 15 any faster than this. If I do, you're going to get into false moves. And we will sacrifice specificity for sensitivity so much that you're going to get into bad trades. And I don't want that to happen. So I'd rather let some trades that run go, and when we get a signal, you know, we have a solid trade. And it just so happens here, the 15 didn't cross the 50 on this color. And let me just check something here. Nope, it's set good. Just the way the market moved. I mean, it's not going to be perfect, but it is optimized. And you're going to see that happen almost always. If we look at a cross here. We have to look at the 15 crossing. Crude, not exactly, but I'm telling you, it's optimally set, believe me, for when you should take a trade. See right here, 15's crossing the 50, and the background bias kicks in fairly quickly for a short trade. All you would need here was a wick to take this trade short. We can't ask the market to give us what we want, but that's what we'd be looking for on that trade. And what would make that trade so great is you're trading off a dual resistance, the 15 and the VWAP. We just don't get what we want here. So the trade just shot down. And you remember, I mean, you know how fast crude can move. I mean, thick crude can move like a lightning bolt when the institutions come in. And this is 7-12-0-0. Okay, this is a very slow move. This is, in fact, well, here it's starting to move fast. All right, let me see if there are any questions. You know, this explanation of the software, I will record. And I mean, it's being recorded, and we'll chop off of the trading session. Even if we didn't chop it off, you could just forward the video and skip the trading. And if you want me to leave it all intact, I will. And you can just slide it forward if you want to. But you can see the market's just dead. Now, crude's moving, but look at the volume it's moving on. I mean, who wants to trade that? I'm not trading on 10 contracts a minute or 15 contracts a minute. Now, I'm looking at the market. Now, Campbell's Soup is taking a complete, utter dive. It's down $1.63, and I don't know why it's going into a hand. And today it declared a dividend, and it's getting killed. I don't know why. Everything else is doing really well, really, really well. Except for Wynn Resorts, and Restoration is falling. It's a really tough market. Let me tell you, we're up a lot. We're still up, but not as much as before. Okay, let me look at the questions, and I'll keep the questions in, because if you ask a question, you probably have the question. Probably everybody else does too. So let me go through them. Hang on a second. I hope I made it clearer what we're looking for. And I'll tell you, if we just sit on our hands on trades that are risky, we can make money almost every single day. Hey, good morning, guys. Good morning. Okay, hey, David, I just put up ZB. I'll put it up again real quickly, David. Here's ZB for the day. And not much on ZB today. Now, I mean, that's a potential long trade. It's risky. It's off the 15. It doesn't have your intermediate quant, which I think you really need. We haven't retooled it yet, and we're going to. But market structure wise, that's a tough long. Now you do have dark dots, green background, and I'm sure you had the 3 line here. So it's just a tough trade. And remember, this is a small range candle, and this is 3 ticks off. That's a discretionary trade. Up to the short side, there's nothing. And moderate volume, about 250,000 contracts. And you know what? I'll just show you. We'll go to ZN. Show you ZN. That should only take a second to load. Famous last words. Here it goes. Take a look at notes. Here are notes. Very similar to bonds. You can see now, all I have to do though is I have to load the ZN template. Now the quants, at least our old quant system, will be in. Now here it is. Very, very similar to the note trade, to the note setup. A risky long. It's amazing. I mean, these almost mirror images of each other. And a no trade short. Identical setups on bonds and notes. Those are strong correlative markets. Okay, let me see, Gerald. You took one trade at 10.57. Let me take a look here. 10. Okay, let me tell you. That's not such a bad trade. It's it's risky, but you had 5 quants. I mean, we had all lines. Let me tell you, you made money. That's not a bad trade. I'll tell you. It's obviously risky, a little bit more risk than I would have liked, but it's not a half-baked trade by any means. In fact, it's a pretty heads-up trade. I don't know what volume is like. That went 30 ticks, and that was a good trade. I mean, watch out for these. These wicks that come back like this, that fail, are powerful reentries. Now, the thing is, this was in retrospect, I still think it's overbought, Gerald, for both your trade and this potential trade. But I would just ask you, if you took this trade here, why didn't you take the trade here? I think you have pretty much the same thing. You have all 5 quants, well, 4, I'm sorry. The 3 quants, you have the cash, you've got the green, you're tighter to support, you still haven't broken this pivot. I mean, and that might be the reason. It's not a very big pivot though. Let me take my line off here. So if you could type at the bottom, I mean, it may be that you just missed the entry and you wanted to enter on a pullback. That's okay, but that's a pretty good entry. If you're going to take this entry, I would just ask yourself, why not that one? Both dots here, dark color. So you know your higher time frames. The 15 is above the 50, 15's green and 50's green. So you've got yourself a nice Russell E-mini trend right here at 1048. Okay, Mercedes, is it possible to program alert that sounds when price is at a level or above and vice versa below? I am reluctant to 8. Ninja 7 doesn't do these types of alerts. I think it would be very useful to assist in monitoring 2 or 3 possible 2 or possibly 3 of the slower markets without missing trades. I missed 3 trades because I was not able to watch it, but I might have gotten 2 or 3 of an audio alert. Well, you know what, Mercedes? If you can give me the distance off, I'm assuming that you can't give an absolute tick value because you don't know where the market's going to be. But if you can provide me with the distance off the 50 that you want them to fire, I can have Sergio program them. Like if you want 4 points off the NQ, we would have to do it instrument by instrument. I know that you look at the NQ crude and the DAX. If you can give me the levels on those 3 instruments that you want, I'll talk to Serge about coding them for you, okay? And maybe they'll help us all. So just give me the distance off the 50 or off the 15, but some hard tick level. And we can code it. I think that's an easy code. And we can make that an audible alert, an optional audible alert. Okay, so we'll do it. Just give me the values, and you got it. Okay, let me see that, Ron. On the NQ using the old 50. I mean, listen, I want to. Now, because Ron's saying we missed some entries looking with the old 50, and let me take a look at that. I mean, I really welcome your feedback. Here's set to 50. Let me take a look. Okay. Now here's the old 50. Let's start at the beginning. You know what? I'm just going to make the old one because they're both 5 now. I'm going to make the old ones thin. So that's just going to be a 2. So we'll be able to easily see the difference between the 2. It may be that the old one is better. I mean, I didn't think so. And when we looked at the data, we didn't think so. But you might be right. Well, let's take a look. Now, neither one of them are giving us a trade here, Ron. I don't see one. Of course, the MA diff here is much tighter. Now, this line is supposed to move faster, not slower. I think there's a problem with it. This is moving faster than this line. And I think that's part of the problem, Ron. And I think I have to have Sergio look at this because you're correct. Right here is an entry at 936 off because here the MA diff is small. Here it's huge. So you're correct. Let me keep looking. Here too, MA diff here is small. Here it's gigantic. I have no background bias here. That's a risky trade with no background, but you have an entry. Now here, I think you do have background. I think I just have to reload the chart. I think it's the software playing games with us. Yep. See, that's a trade. And I do not know why this 50 is hanging back like that. And here's a cross. I'm going to have to look into that, Ron. Thank you. Let me put the 50 here as well and see how this looks. Because you're correct. We would have had a couple of really nice winners. Thank you. I mean, that's a big thing. I appreciate that. I have to have Sergio look at the code because it should be a faster moving, not a slower moving. It should always be above it and tighter to price than farther away from price. So the way it's functioning now, it is not working. Now here, it's the faster line. It's right here. It's coming down faster. Here it wouldn't have made much of a difference. But this line's not working. You're right. It cost us 2 trades today on the NQ. This trade right here, the one that Giral got in on the pullback, which makes that pullback now very, very nice pullback. And right here, we've got the 50 all the way down here, and just a simple SMA is all the way up here, and that should not be. So something is wrong with the coding in this indicator, in this modified 50. Way, way wrong. So thanks a lot. That was a big thing. I appreciate that, Ron. No, it's not that. It's just that it's not working. This line should always be above it and faster, not below it and slower. It's not functioning properly. Let me see how it looks when we fix it, and it's working correctly. And then we'll decide. Maybe the SMA is good there. Yes, no, that's it. No, I see that. Yeah, David, Sergio's just about to send out a whole new ZBZN package and everything. I'm staying conservative. I got 1 trade today. I don't regret it. The only thing I regret is the fact that this 50 wasn't moving as fast as it should, which may have given us some entries. But based on what we saw, I traded very conservatively, and I'm not risking anything. I'm going to stay very conservative. Everybody in this room is conservative, Giral. Yeah, you know what? Here, Jerry, Unorenco bars can have ghost candles. In other words, they're going to jump when there's no volume at price, unless you code into the candles not to do it. And we have. So these candles are accurately tracing out price. Now, I don't have the old Unorenco bars that do have the ghost candles, the ghost formations. They occur 3 or 4 times at session. And what they'll do is they'll modify the way price is traced out on your chart. So they don't occur anymore. And being able to get rid of them was a pain, but they're not there anymore. I mean, the Unorenco is going to jump when it gets to when it moves 1 tick up. And sometimes it'll make a jump with no volume at price. And when you see it, especially on the faster Unorenco bars, it really does skew how price is projected. But they're gone, Jerry. It really is, Mercedes. Price can be expressed in so many different ways, which is why we do a lot of background bias and dot off a range, because there's a lot of symmetry between Unorenco and range. And I like the fact that we get this arithmetic movement on range, but we've got it set so that it keeps up with the geometric movement of Unorenco. I mean, the dots are very precise, and they're being traced off of two higher range charts. And they really work well. Now, I think Sergio actually has a line here calculating off of 1 minute too. I mean, it's all based on our attempt to try to optimize what you just typed, how price is displayed. I will be, Saram, and also I'm going to record. I'm going to send this out as a recording, so you can have both. Well, remember, JTrader, remember that the indicator pivot, the pivot indicator, is set to a sensitivity of 150. In other words, it's not set to give you every swing pivot, only what we consider to be the important. If I set it to 50, watch what's going to happen. Now, if you want to see more pivots, you can, only it's going to drive you crazy. Now, I'm still not getting any pivots. I might have to go in the other direction. So you are getting more pivots. You see all these pivots tracing out here? And more intermediate pivots. And see these 3 pivots here, 4 pivots? You're getting a lot more pivots to trade. So the number of pivots that you want to look at depends on the sensitivity. If I drop it even lower, you'll get many, many more pivots. But I think the best trade-off between sensitivity and specificity is 150. And you know what? The question that you're asking, I can pose back to you this way. We use a 50 and a 15. Why not use a 50 SMA or a 50? Why not use a 40, a 30, a 20, a 10? Why just use this moving average and this moving average? Why not have 25 moving averages? They're all relevant because they're all the average closing price for the instrument going back 50 candles. Why not have a multiplicity of moving averages? When I first started, I put up a 100 and a 200, and I've long since removed them. It all comes down to, you got to put up what you think is most relevant, and you got to put up what you think improves your trading precision without getting in the way. Because in point of fact, there's no reason why you can't put up a 40 or a 30. I mean, standard, you use a 200, a 100, a 50, you can use a 10, but there's nothing special about those numbers. I mean, they've just been accepted, and that's what we've been indoctrinated with. But there's nothing more relevant about a 200 than there is about a 180. But so it's the same thing. The pivots at 150, I think, are the most relevant, and we don't overdo it. And unfortunately, there may be a trade, one trade that turns on a pivot we don't see. But if you put up all the pivots, you would be stopped from taking 1 million winners. So that's the trade-off, and we have to live with that. So I hope that makes sense. Song, there are people that do use order flow. They use that level 3. I have to tell you that. I've looked at it, and I can't see its relevance. I know people use it well. You know, they use the there was a trader in here who used a 5-minute level 3, and he traded incredibly well. And he showed me what he did. I just couldn't understand it. I think our order flow line does really well making an assessment of bull bear pressure. And so I think that you can always add it if you like, but I don't think using a level 3, say on a longer term time frame, is going to help us out much. But that's just my opinion, and I know there are traders that love looking at a longer time frame, level 3. I just want you to know that. So I'm just getting my personal opinion, and I think it's a really good question, actually. I think Song institutional, I think it would help us elucidate. A level 3 would, but I think all you really need to do is just look at this indicator right here. This is telling you how many contracts are crossing per minute. I mean, listen, when institutional traders come into the market, it's sudden, it's completely abrupt. You can't anticipate when they're going to enter. All of a sudden, volume skyrockets. You're going to see it immediately on a level 3, but you're going to see it right here too. All of a sudden, volume is going to skyrocket, and you're going to see it within 10 or 15 seconds. I don't know if you need to make it more complex. I truly don't. And remember, we do have order flow, which reflects market depth. So if they come and but remember, we have two 15-period moving averages. So those moving averages aren't going to turn on a dime, but they're eventually going to turn pretty rapidly if the institutional traders come in. But we need momentum on stochastic to turn as well before we get a change in the 3 line. So it's tough to grab an institutional sudden change in direction. And I don't think a level 3 is going to help anymore. And I think this volume does a really good job in letting us know when to stand aside. And it's just the small fries trading like us. And to stay away from the market during those periods of time. And you can see right now, I mean, we have a long bias, but the market's just going nowhere fast. I mean, there were a couple of good trades. This wasn't a bad trade, but there's no validation for these trades, just no volume. But that's all good, a good point on a level 3. Yeah, market, David, that the price is going to turn. When you see an up candle with a down 3 line, look for price to roll. That's your cue. Yeah, Donovan, today the YM was gorgeous. I put it up. Those trades on the YM were fabulous trades. I mean, this is the best YM day I've seen in a while. I mean, look at these trades. Long, all valid trades. This one's not quite for the quants, but these are beautiful setups, hard to ignore, I have to tell you. And remember, we're on the old quant system where everything is too slow. I mean, these are gorgeous setups here. I agree with you. This is a beautiful market to trade today. And I do believe that 50 may have hurt us today. And I have to find out why our 50 is moving so slow. I put up the exponential and the simple 15 yesterday. So I know that our 15 is moving perfectly. But there's something wrong with the 50, significantly wrong with it. And Ron, thank you again. No problem, Donovan. I hope you made really good money. You got great moves today. Gerald, that's absolutely a terrific answer. You're worried about the pivot, and and it's a relevant concern. You waited for it to break, and then you got your pullback with no pivot. That's absolutely a great way to trade. And now that I see where the 50 is, you took a great trade. I would have taken this trade too. I mean, this kept us out of this trade. So you took a great trade. If anything, this 50 should be tighter, not further away. So I think this is coded wrong. See, this is why we haven't sent it all out yet, because we found a bug. It's hard to believe, but Sergio isn't perfect. We always consider him perfect here, but he makes mistakes. Okay, Mercedes. The MA diff, David, is simply the space between the 50 and the 15. The MA stands for moving average difference. And if you use an oscillator to calculate overbought, oversold, it will not work for you. But as the 15, and we've done this on 2 years of market replay data, so I know it's true. As the 15 starts to pull away from the 50, there comes a point where price is significantly overbought, and the chance of getting a long trade where the risk equals the reward becomes very minimal. So you can see it over here, and it's not working because we never had a 15. Now that we have a 15, I'm going to have Sergio recode it, and then we'll calculate how far off the 50 the 15 should be before where we can take a safe trade and where we begin to accrue risk. It's a really easy calculation to do. So that's just that'll be coming. That's what the MA diff is. The offset, David, means this. Open offset. I mean, I don't understand why it's open offset. What it is simply, if you look here, well, that's 14. Okay, the open offset. If you add the tick trend to the open offset, you get the size of the candle body. That's all it means. I mean, you have to split these two out because you need to know when to form a new candle. But the open offset plus the tick trend equals the size of the candle body. So every time you get a new candle body on a trend, it's going to be 14 ticks. This is where we don't get the shadow entries, where, and I'll show you what I mean by that, where price will only come down this far, never come all the way to the bottom, and then it comes back and jumps to, which by definition should form a new candle because it's 2 ticks higher than the previous candle. This is not going to happen here. But that's what that is. So just add the open offset to the tick trend, and you got the size of the candle body. Add the tick reversal to the tick trend, and you get the size of a candle body plus wick on a reversal. That's why we have an initial 25 tick stop. 20 plus 4 on the 25th tick, you're going to get a reversal candle. No problem, Song. No, my pleasure. That was a very good point. The YM Cerium, exactly the same as the NQ. 10-4-20. and you saw how beautiful it works. I mean, the YM today had gorgeous trades. 10-4-20, YM, NQ, E-mini is different. And I'm going to get Sergio to post those to our website. We're having our whole website rebuilt, and we're going to have a users section where you're going to get to log in and get all of this data without even worrying about it. But if you need any of this information, just send me an email, and I'll send it back to you. Now, there's something wrong with the 50. There's definitely something wrong with it. I'm telling you, it's coded wrong. I'm gonna have Sergio. I'm gonna talk to Sergio as soon as he comes in, as soon as we finish. So that's it. I mean, listen, you're gonna have ongoing questions. I'm always going to try to answer everything at the end of the session. I mean, this 50 cost us trades today, so I'm a little frustrated. I would have taken this trade just where Giral took it, and we had an early trade that was beautiful right here. Maybe not here, this wick right here. I mean, that's a gimme trade because the 50's right here. I mean, we had to calculate it down here. So very frustrating. But we didn't take any losers, which is important, and we'll have this fixed by tomorrow. My pleasure, David, and thank you all for coming in. I mean, we've got over 150 people in the room, and I'm really honored, and that's why I have to be so, I want to get trades, but I have to make sure I don't take losers. And, I don't want people to sit on their hands all day, but I've come to the conclusion that everybody wants to trade conservative and would rather sit and not take a trade than, take two winners and a loser. What we should do is eliminate all three of those trades. Just stay conservative, and we're going to get the winners. That's what we're going to do, David. But if you want any day, Rory will send you the link. When we get the users part of the website, we'll have every session recorded and available for replay. The building of the new website just started. So it's going to take about 2 or 3 weeks. It's going to be really different. And it's going to have a user section where if you're a member, you're going to get a username and password. You're going to get I'm going to make JPEGs for all the settings. Like if you want to go to an indicator and you're not sure what the inputs are, it's going to have all the inputs. I'm going to make JPEGs of everything. So you'll have everything. You can have the JPEGs of all of this. You're going to have replay data for every single session. You can record it. And we're going to start doing a performance. Start again. We did it for 3.5 years. Every day we posted our daily win-loss in the trading room. And since we've been doing all this modifications and upgrades, we stopped. We're going to start doing that too. And we're going to, and David, next week, Sergio and I together are going to hit that auto trader. But this 50 and 15 and the MA diff are key parameters for the auto. So we need to calculate them. This is one of the reasons why the auto wasn't working. And now we're going to get that working. And I'm telling you, it's going to take great trades. This is the issue. But listen, the auto is in the works. Absolutely. I have a lot of people waiting for it to work, and we're going to make it work. And now we've got the independent variables to do the job. So take care, everyone. Have a wonderful, wonderful afternoon. We'll be back tomorrow. It's a Friday. Let's be careful. If we can get a couple of quick winners or one full winner for 350, that's it. I'm not taking any chances. If we can pull a 350 out of one trade, I'm not going to continue. If not, we'll go for 2 winners. But we're not going to extend ourselves out tomorrow on a Friday afternoon. I mean, look at the market right now. It's 155 on a Thursday, and it's deader than a doornail. Completely dead. No, our old stats are unbelievable, David. I mean, our first year, we made $75,000 in the trading room. And those are all, every number is real because we had so many people in the room. If we posted a phony number, it would be all over the internet. We would have 100,000 complaints. I mean, we made 75K our first year, and we made about 50K our second year, and I made about 35K our third year, and now we're in the process of retooling. I want to get back to 50,000 plus. All right, everyone, have a great afternoon again. We'll see you tomorrow. Take care. And I'm going to clip this and I'm going to clip off the trading session. If you want I'll leave the whole video. I'm not going to clip it. If you just want to review any of the questions, just skip the trading session. Okay, David, take care all. Bye-bye. So you're going to get the whole video. Bye-bye.